Welcome to my channel. Please like the broadcast, become a subscriber, and hit the button. Be a part of our community. Today, I'm giving you an alert concerning the 2025 filing season. Now, we're talking here about personal taxes. As you know, everyone should have received their IRP5s by now, and that is basically a summary of all your earnings, your payslip, your income, your deductions, if you've got medical aid contributions, retirement annuity. We've talked about this in our previous videos. Please go back if you're not sure what I'm talking about. But basically, every employed person should receive a payslip every month, and the employer should also be submitting a monthly return. It's called an EMP 201 return. After that is submitted, every half year, there is a recon that is done, and you should get an IRP5. Now, the important one is the 12-month IRP5, also called a tax certificate. As an employee, once you get your IRP5, you are now ready to start filing your tax return. We've also noticed in the last few years, SARS has made life easier by doing auto assessments. Now, an auto assessment simply means you do not actually need to go through the trouble of filing the return step by step. SARS does it for you, and it's based on the information. They call it third-party information. Pretty much an AI simulation that takes all your information from your employer, your IRP5, from the banks, if you have a mortgage bond or you have interest in a savings account, medical aid, retirement annuity. So all the institutions that are part of your personal tax will give information that will be used to pre-populate your tax return. So you get an auto assessment, and at the end of the year, you can actually pick it up and decide whether you're happy with the results or not. Now, the problem comes is when you have a logbook. If you have travel allowance and a logbook, SARS cannot finalize and give you an auto assessment because that information they are not privy to. Only you as a taxpayer can tell them what kilometers you traveled, where you traveled, and what your costs are, such as your fuel and repairs. That all needs to go into your tax return. So for a simple tax return, where it's just the IRP5, perhaps medical aid, pension, retirement annuity, that can be automatically assessed. Now, the deadline for that, in fact, I should start with the date in which the season officially opens. It's the 7th of July. So from the 7th of July to the 20th of July, please look out for your auto assessment. If you do not get an SMS or an email telling you you've been automatically assessed, it means you need to go the long route and file the return correctly. Now, if you accept the auto assessment, if you have a refund due to you, you will get it. If you're owing SARS, you need to pay them. They'll usually give you about a month to pay them what you owe them before they start charging penalties. Now, so the first date, 7th to the 20th of July for auto assessments. From the 21st July to the 20th of October, they now give you time to submit your return if you have not been automatically assessed. So you have all that time to get your information. If you need a tax practitioner to assist you, find one. If you're able to do it yourself, file. Make sure by the 20th of October 2025, you have filed your assessment, your income tax return. My apologies, I'm so used to talking about assessments. So you make sure you filed your tax return and you then get your assessment. It's called an ITA 34. Now, for those who are not employed full-time, they're sole proprietors, for instance, or they're consultants, they don't get a pay slip, they don't have an IRP5. You still need to file your tax return, but SARS does give you until early January of next year to file. So you have time to do your financials, because you do need to do financials, to get all your information together and be able to file. Again, if you're not sure, please find someone to help you, because SARS is becoming stricter and stricter with the supporting documents, with the deadlines by by which you need to submit them. And if you do not submit your supporting documents for all your expenses, then they will simply disallow your expenses and you'll be expected to pay tax on the gross amount that you have received. In other words, your earnings will be taxed, and it's the premium rate, and you cannot then bring through your expenses in order to bring down your taxable income. Join me as I talk about these and other interesting topics on my channel. Please like our channel and please subscribe. Have a good day.